Singapore's second biggest lender, OCBC, has beaten market estimates with an 11% rise in its first quarter net profit compared to last year. This driven by broad-based growth across various segments, rounding up a strong quarter for local banks.
Still, analysts are cautious amid escalating US-China trade tensions and a possible Fed rate cut.
An improving interest rate environment has helped lift earnings for Singapore's lenders. Of the three local banks, DBS and OCBC were able to capture this rise, taking the chance to lift their net interest margins, a measure of the bank's profitability. OCBC improved the most by 9 basis points, while DBS was up 5 basis points.
Net interest margin grew very strongly both on a year-on-year basis and on a Q-on-Q basis. This is primarily reflecting the repricing of the assets. And the assets repricing is not limited to the housing loans. It also applies across the board to all of the loans, because when you do a loan at the time of origination, there could be some constraints on whether you can raise the pricing or not.
But analysts say it might be a long shot for banks to hike interest rates, given the Federal Reserve may cut rates further. Moreover, the ongoing US-China trade war leaves Singapore's banks vulnerable. On Monday, the Straits Times Index suffered a sudden drop of 3% after US President Trump tweeted tariff threats on Sunday.
For UOB, because its net interest margin was declining for 3 consecutive quarters, even though that local interest rate is rising. So I think UOB is more fragile against the scenario of interest rate cuts because it's already low. And it's more difficult for it to improve that margin if the rates are trending lower. Whereas for OCBC, I think it is more susceptible to the risk associated with China, because about 19% of its profit before tax come from the China market.
Across the board, all three lenders saw mortgage loans growth shrink. And though analysts are worried now, they expect some respite.
If this were to deteriorate further, that would affect the bank's net interest income, because the majority of the loans reprice is from the mortgage sector. But in that case, in that sense, we also expect property launches to start picking up, because Q1 is a seasonally weaker quarter for property launches. So property launches will pick up as we near the third quarter and fourth quarter. So that will also translate to demand for mortgage loan as well.
Shares of OCBC gained 0.71%, while UOB gained 0.51%. DBS, however, closed 0.19% lower.